SoFi just announced their Q3 earnings, and on today's show, we'll go through them. We'll take a look at the kind of the loan mix. We'll go through all the financials so you're clear on what's been going on with this company over the last quarter. They obviously have their new bank charter, which is, I believe, almost a year old now. We'll walk through those financials and see how they've changed things and how things have really started to clean up, but this company still has a ways to go in order to get to profitability. Come over here and look at this from a technical perspective. Certainly looks like maybe this one's looking like it's trying to form a bottom. We'll talk about that from a technical perspective, and if this is a decent area to acquire shares of SoFi, either for the longer term or even for the shorter term trade. What is going on, investors? Hopefully guys are doing well out there. Time to talk about SoFi. After reporting their Q3 earnings this morning, the stock's up over 13% during the regular trade. I am recording this about 8:30 a.m. Pacific time, so obviously there's still a long ways to go in the trade. Now, over the last year, the stock is down big, down 72% year to date, down 60%. I think we have to keep in mind the fact that this company has a $5 billion market cap as we walk through these financials, and there's still a tremendous amount of short interest in the stock, over 12%. That is probably fueling some of this rally as we go through these results. They're good. I don't know if they're 13% good, but when you have nearly 13% short interest in your stock, well, there's a lot of people that have to cover on those. Now, Q3 earnings came in, revenue came in at $424 million. We'll come over here and we'll look at that. They essentially have two different segments of business, but you got this $424 million worth of revenue. That was good for 55% growth year over year, and it beat expectations by a lot. $32 million off of $42 million is just south of 10% beat. I tell you what, you don't see that very often. Wall Street was expecting a revenue number closer to $391 million. When we start to look out for subsequent quarters, this company is going to maintain a pretty strong growth rate out into the 30% into next year. Now, they also raised their full year guidance as well, expecting total revenues to come right a shade over $1.5 billion. Consensus was right there at $1.5 billion. And their previous guidance was just south, like $10 million lower than their current guidance. So they're just edging it up a little bit, but they also adjusted their full year adjusted EBITDA number to $115 to $120 million. That was up considerably from 104 to 109. So they're doing a nicer job, maybe kind of controlling cost and driving kind of an adjusted EBITDA, quote unquote, profits. When we come over here to the financials, you'll see from kind of a GAAP perspective, they are still not making money over at this company. Now, obviously, we've got that strong growth rate. Company needs to maintain that, but look, you've got a $5 billion valuation on this one. And when you look at these kind of annual numbers at this company, you're doubling this revenue really quickly out into 2025. You should have about $3.3 billion worth of revenue at SoFi. Now, some of the tailwinds is the fact that initially you had really good news when it came to that student debt relief. Joe Biden, I don't think he passed a law. I think he somehow finagled this through Washington somehow, and so he allowed, I think, maybe up to $10,000 of student loan debt relief. But however, there's obviously been some turmoil in this as a court temporarily blocked Biden's student loan forgiveness program. And while it appears the government is still taking applications for this, my guess is this is going to play out over a longer period of time, as I think the Biden administration was hoping to get this done maybe by election day or by the end of the year. It doesn't look like anytime these things get locked up in court like this, it's probably going to push that timeline back a little bit. And that's obviously going to impact SoFi's financials in the shorter term. The other thing that I noticed is there's some data that's come out more recently that the demand to attend a four-year college has started to lose its appeal as less people are choosing to go to college, as the cost of that, and also employers just not necessarily requiring the four-year degree. We'll see if this is something that is a longer term kind of secular trend or something that is just temporary, but certainly could impact SoFi and any student loan provider into the future if less people choose to go to college. Now, in terms of the most recent quarter, their originations, obviously this company is actually coming under pressure in two of of their business lines. So they have these home loans. Obviously, we could do a whole show and a whole segment on the real estate market. That's certainly coming under pressure as those interest rates continue to tick up. Look at that, down 73% year over year on those home loans. The other business that's coming under pressure is obviously those student loans. That is down 53% year over year. So SoFi has switched to personal loans, which, look, first of all, they've done a nice job replacing two business lines that have really seen steady declines in terms of demand over the last year, and they've replaced it with personal loans. The problem with personal loans, as you know, is they are not collateralized against anything, and they tend to have a higher default rate. Now, they tend to carry a higher interest rate, and so if they are paid back and they do a nice job lending those out, well, you can see nice returns. So those are up 71% year over year. So you see their total origination volume went from 3.4 up just 2% to 3.5. But again, the entire mix has shifted from collateralized home loans, student loans, which tend to have now the backing of the United States government and the taxpayer, to personal loans, which again tend to have a higher default risk, higher credit risk. But I think the other thing that this shows is that SoFi can be rather nimble in shifting their loan demand very quickly as some parts of the business start to pull off and others get a little bit better. Now, come over here to the financials. We see their interest income. This comes from the side of the business where they achieved their bank charter. They're now taking bank deposits at SoFi, and they're doing a very nice job at that. And they're generating quite a bit of interest income off of that. $198 million in the most recent quarter. Look at this. It's up $100 million year over year to just $93 million last year. Again, up to close to $200 million. The beauty about that business is it's wildly profitable. Look at this. They had to pay just $40 million worth of interest expense in order to achieve $198 million worth of interest income. So you get your net interest income. This is your income minus your cost off of $198 million worth of income. You had essentially profits there of nearly $158 million. This is fantastic. Now, they have this other non-interest income. These are the other products not related to just straight lending. They originate loans and they sell them. They do servicing on loans. They have technology. They have other fees. That gives you non-interest income of $266 million. So it's still the larger business, but it's growing at a slower rate. You notice last year you were at 199, nearly $200 million, growth to 266. My guess is this time next year, that non-interest income, which is way more profitable, will be the bigger book of business for SoFi that will ultimately be good for shareholders. So you take your net interest income of 157, you add it to your non-interest income at 266. So you get that total net revenue coming in at right around $424 million. That's the number we showed you off the top that grew 55%, nearly 56% year over year. Last year, you were just at 272. So solid growth on that revenue side. Now, the problem is you still have a lot of non-interest expenses over at this company. This non-interest income comes with a lot of expenses as well. The one I noticed that really ballooned, and the one that you really don't want to see companies balloon year over year, is this general administrative. This 3x'd. It went from 40 million all the way up to $126 million. So they're blowing a bunch of money on parties, back office, just general administrative stuff, flights, hotels, those types of things get funneled into general and administrative. All the other costs ticked up in relation to the revenue growth that you saw over at this company. So unfortunately, we take this $424 million worth of income and we take our total expense line, that's all these costs added up, that added up to nearly 500 million, or more exactly, $498 million. So you take 423 and you minus off 498 and you get a negative number. So our loss before we pay taxes over at this company sitting right around $74.5 million. Last year, it was far less at $29 million. So you had some cost, and in my opinion, the G&A line got out of control over at SoFi, and that really spurred a higher loss from operations than I think probably should have been required from this company. You flow down to diluted earnings per share. Last year, you lost 5 cents per share. This year, 9 cents per share. We'll zoom down to the balance sheet. You're seeing here with the business model shift that SoFi has, they're carrying a lot more, obviously way more loans on their balance sheet, just $6 billion last year, all the way up to $11 billion this year. Notice down here, total deposits, it's actually a liability coming in at $5 billion, obviously over last year where they didn't even have this bank charter. So again, you'd want to see in comparable quarters, this number continue to go up. The more deposits they take, obviously, the more they can loan this out. You come down to cash flows, and I don't think you analyze this company from a cash flow perspective, because you come down here and look at net cash provided by operating activities, and it's like a negative $4 billion because they have some funky accounting things that they have to do as a bank. I don't think cash flows is how you analyze this. However, you can take a look at the share-based compensation expense, how it's gone from 162 up to 235. Here's the other thing that I saw, the provision for credit losses last year, just 2.9. Now, their business model obviously was a little bit different. They weren't carrying these loans on the books. Now you're carrying far more personal loans, up tremendously to 39 million. You want to see how that moves through the system. They also invested quite a bit in property, plant, and equipment over the last year. 38 million last year, all the way up to 76 million this year. And then finally, you come down here and you do see the net change in deposits. You'd want to see in subsequent quarters, this continue to go up, because the more deposits they take, obviously, again, the more that they can lend out over at SoFi. That was it from a fundamental perspective. From a technical perspective, this one actually looks somewhat decent. Now, obviously, if you bought into this one at a higher price, it's just been on this steady decline down, but we've more recently kind of broken out on the side of this. This certainly looks like a bottoming formation here back in kind of the $4 to $5 per share range. While we temporarily kind of broke down from this uptrend that I've identified with these two green like kind of channel lines, we broke down temporarily, but we've kind of busted out above it. Now we're sitting here. We have created a little bit of a gap here. So you'd be concerned if you break down through this line, you're absolutely coming back down to 550, filling that gap. But the other scenario is this channel, this lower channel line is back intact. We're still, yes, we had some small deviation, but we're making a series of higher lows, higher highs, and this one moves back to the top of the channel. That would be a tremendous move with this one. If you were to get back halfway to the channel line, that'd be about a 20% move. You get to the top of the channel, you're looking at like a 45-50% move on this stock. And so despite the rapid rise in this stock, which I think is probably attributable to some short covering, there certainly can be a larger rally in this stock if this upper channel line continues, as the shorter trend in SoFi is actually looking pretty good. Obviously, though, the longer trend line is, and the dominant trend is still down on this one. A more immediate catalyst with this stock is a resolution in this student loan forgiveness program. A negative outcome here is likely to not be resolved, as it appears next week's elections will change the balance of Congress, and I don't think they'll be quick to hand out $10,000 to students. But SoFi has kind of offset that a little bit by shifting into personal loans. And while I think the home loan market will probably remain under pressure, eventually that will turn around as well, likely with slightly higher rates than what we've seen in the past. This company's pretty well positioned. I don't necessarily think you need to have more of a position in this one than maybe a broader XLF ETF, the financial ETF, or certainly like a Bank of America or JP Morgan. But this one certainly could round out a financial portfolio, give you a little bit of upside, as the volatility in this name obviously a lot higher than a traditional bank. Hopefully, you guys enjoyed today's video. Be back again soon with lots more. Good luck with your investments.